Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hi everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar posted modest gains following lower than expected December core inflation data released on Wednesday. The US Consumer Price Index, or the CPI, rose by 2.9% annually, matching expectations, while the core inflation eased to 3.2%, below the 3.3 forecast due to rising energy costs. Earlier in the week, the PPI, or the Producer Price Index, rose less than expected. Despite Wednesday's rally, investors remain cautious ahead of President-elect Donald Trump's inauguration, particularly concerning potential trade tariffs. Additional economic data, including jobless claims and retail sales, is set for release later this week. Back home in Australia, unemployment rose by 4% in December, up from 3.9% in November, which was in line with market expectations. The Australian employment change reached 56.3k, surpassing the forecast of 15,000, and the revised was 28.2k from November. So turning to the technicals, the market's still got a lot of work to do to the upside, but still keeping an eye on that level of 62.60 that may lead on to 63.10, with any weakness finding support around 61.85. Despite the softer December US core CPI data, the market was a little bit lackluster when it comes to the euro. Nevertheless, the technicals are still showing a potential rise, that is, in the price, due to the fact that there was bullish divergence, and from the given hammer that was posted a couple of days ago, the market should eventually reach the region of 103 to around 103.60. Bargain hunters are expected to return towards the bottom side around 102.40. As the bears weighed on the market, the level of 156.70 was crushed. Now, we did get a confirmation, first of all, from the topside rejection engulfing candle, or a bearish outside range day, followed on now from the market taking out the level of 156.70, now opens way towards the region of 153.30.65. And for those who are trading yen crosses, keep an eye on those as well, because if yen does strengthen, it will reflect on the crosses. Immediate target is at 155.30 and down at 154.70, and as I mentioned, 153.30.65 as the call, with any upside attempts likely to find a cap around the region of 156.45. The British pound has formed a tri-star pattern consisting of 3 consecutive doji candlesticks. Tri-star patterns typically appear at the end of a prolonging trend, which is what we have, and signal potential of indecision or a reversal. In this case, a reversal, that is, from the bear back to a bull, and with immediate target seen around 122.60 and maybe onto 123 to 123.70. However, traders should watch for confirmation of a trend shift, as the pattern indicates a pause or an exhaustion in the current movement. If followed by a strong price action, this could suggest, as I mentioned, a potential reversal or rally onto the 123, 124 target. Still to come in the UK is the GDP, so keep an eye on that as well, because that will probably cause a little bit more whipsaw price action. It was all bullish cheers when it comes to commodities, mainly gold, as it reaches its target of 2,700 and now puts a spin on the top side to maybe extending on to 2,730 to around 2,744 to 48, as the technicals are still a little bit firmer. I'm watching this pattern though, just in case this divergence here may give a little bit of profit taking, but any pullback I still feel will be snapped up by bargain hunters anywhere from around 2,670.80. And given the fact that the ADX is showing a very strong bull trend, then we'll limit the downside, and if so, keep the upside pressure going. Wrapping up with oil, the rebound is now extended slightly from the recent range of 78, but still feel there is a potential bearishness coming back into play due to the divergence, and if so, should find a rejection anywhere towards $79 to $80 a barrel and look back towards 76 and reassess from there. This market is going to get very whipsawed, so as I mentioned before, traders should continue to adjust their positions accordingly to their risk management in the event of unexpected moves. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report, and I hope you enjoy the great start to the day.